Hello traders, welcome to your technical update for Thursday the 5th of February 2015. Well, I'm on the New Zealand daily chart and let's get into it. We've seen some price action here with quite large indecisive candles. This has been because we had the interest rate cut from Australia, which heavily impacts the New Zealand, and we had falls. But then we had dairy prices early hours of the morning come in better than expected, and that makes up 60% of GDP, so then we had a rally. That rally fizzled out a little bit and we consolidated back in the same spot we started. But then the next day we had Bank of China intervene and cut interest rates, which irrationally the market bought. And then they realised that it's not a good thing that they're cutting interest rates. The economy mustn't be going that good. And if China isn't going that good, Australia and New Zealand is heavily impacted. So then they came back down to earth and sold off. So we're in this position now where we've had two indecisive candles and the market needs to make up its mind where it wants to go. So for now, while it's in that state, there's probably not a lot of trading opportunities. However, I still think the bias is to the downside. Just because we had good dairy prices for one auction doesn't mean that the economy is going to turn around on a dime. So the pressure is still to the downside. They did recently cut interest rates. The market believes that it's somewhat been priced in, therefore struggling to go lower. However, I think that will take its toll as we move into next week. So there's not a lot of trading opportunities in the New Zealand as a result of just the chaos that's happened the last few days. You want it to settle down. You want the market, which is us traders, to get their heads in the right space and make up their mind where they want it to go. The Australian dollar, very similar story. If I go to the daily chart, except just not as larger price movements. We had the big sell-off from the interest rate, as it should have. However, we had a big bounce back, and this is on some profit taking on the US dollar and also the dairy prices. And then we had some optimism in Europe. So there's a whole swag of things that's seen this irrational move. It shouldn't have rallied the way that it did in the early hours of the US session, which is the early hours of our morning. And then we had a rally the next day on the interest rate cut, which once again was irrational. So we're back down to the original spot we started before the interest rate announcement pretty much. This leaves potential trading opportunities for us to continue to short. There's no reason why the Australian dollar should continue to rally. However, this is a very significant level. If it breaks above this, well then we could move up into the 80 cent area and test the bottom of that. So 79 cents, testing the 80 cent region. I don't believe that that's a rational move. However, non-farm payrolls could potentially initiate that. The downside is the downhill is definitely the momentum trade. That's what I am. I am short the Australian dollar as I put out a trade today. Stop loss is just up here. And should we make some money on the downside is what I'm looking for, and I'll hold it for a fairly long time. I believe that we should get down into the 75 cent range as the weeks ahead roll out. The pound is still in the consolidation. We're still sideways, and we were trading the lower end of the band with a little bit of weakness, but then we've had some PMI data come out, manufacturing and construction better than expected, and we've seen a move to the upper end of the band as expected. This is also the reason this data is painting a picture that the UK economy is not going too bad. And that's been the case for a while now, that it's not going too bad, yet it's under some selling. Their economy is better than Europe. It's not as good as the US, arguably, and the rest of the world is sort of trying to keep their head above water. So I think that the data was quite good, and I did expect it to break out of the range bound and possibly to the upside. It wasn't the case. Tonight we have the BOE, so I do believe it's going to be a non-event, as I mentioned in the economic calendar, and we could remain within this range bound. However, if they do point out that the economy is going okay or quite good, considering, we could see a breakout of this resistance level and just come up and test this downtrend line, just have a little sneak peek above there, and then it's subject to the non-farm payrolls tomorrow. So we'll have to wait and see what happens with the pound. I won't be taking the trade up through there. It's just not something that I like doing. But I'm just letting you know that it is a possibility that if the Bank of England statement acknowledges that their economy's data has been quite solid, so there's no need for them to do any easing in the near term. The euro Let's go to the daily. Now, the euro had a rally, as I mentioned, from optimism from the Greek officials, basically promising the world about how they're going to renegotiate their debt. Everything's going to be rosy, and everybody's realised that it's not exactly going to work out like that. And we've seen a heavy sell-off session yesterday, and we've performed an engulfing bear candlestick pattern, and quite a significant one. So that's definitely suggesting that momentum has definitely shifted. It's shifted in the favour of the bears, and the fundamentals support a short trade because the economy isn't going well, and the rally in the first place was just purely the market getting carried away with the Greeks' statements in the press. So if we go to a shorter time frame, you'll see that we had an uptrend. It bounced off out of the consolidation. Everybody got excited at a healthy sell-off. We're now broken through that trend line, and we've now found support at $1.13, which is a common level. And a breakthrough this would definitely suggest a move lower, and the bears will come into impact. This is a resistance level. It historically was a resistance level. So the market's fallen through the trend line, testing the back of it at a historical resistance level. And it also happens to be a fib level as well. So if I pull a fib from the low to the high, you'll see it's a fib 61.8. So we've got a very strong point of convergence here. And I'm looking to initiate a short trade via Twitter on this should we start to see market momentum kick in the European session and an opportunity to go short. So keep your eyes peeled for that. That's an opportunity that I'm stalking for tonight. And as I mentioned, I'm already in short on the Australian dollar on the basis of fundamentals, and we've got a very strong resistance level now formed off the back of this irrational market movement the last few days. The franc Swiss we won't play in at the moment. Now the CAD, we made some money on this sell-off and it was very good. We had a bounce though, however, at historical level, and that's because oil pulled back. So it was rallying, and we've seen that the Canadian dollar was getting a boost and therefore coming off. But with oil now having a pullback itself, I'll bring up the oil chart. The oil pulled back off a downtrend line. We've seen a rejection of it, and then now we've got a very, very firm bearish engulfing pattern. And this definitely suggests that momentum's back in the bears and we're going to see some lower prices. So this rally, as I mentioned a few days ago, was potentially a dead cat bounce. It does seem that that was the case, and we're now going to see some lower oil prices kick back in again. So we'll have to see how this pans out and see if we find some support. But for now, it doesn't look real healthy. So what that means for the US CAD is that we could see that this bounce actually kick back in and the trend to continue. We'll have to keep an eye on that. The US dollar will also play an important factor in this move, and that will come down to tomorrow night's non-farm payroll statement. So we'll stay tuned for that. Keep an eye on oil. Oil's going to be your indicator as to whether we can get some trading done in the US CAD. But if there is, it's going to be a breakout of $1.26, and you'll pick up a few pips as it rallies through here when oil starts to pick up momentum falling. So see if we can pick up some money there. Now, the US JAP is still in this range bound. It's in a tight range, and it's a game of patience. You must exercise patience here. Don't get frustrated. Don't be inclined to click the mouse. It's going to break out, and I think it's going to break out tomorrow with the non-farm payrolls. And in which direction it's going to break out, we'll have to wait and see. I'll talk more about the non-farm payrolls tomorrow. However, there's no trades here. But tomorrow I'll also chat about the yen crosses, because we're going to see a breakout in the US JAP. The yen crosses are going to be heavily affected as well. So there'll be some trading opportunities in those. Well, there's the charts. That's the wrap up. Have a look at the euro, and that's a good trade I see forming up. I'm already in the Australian dollar short, as I mentioned, and you could possibly scout the US CAD, but we'll keep an eye on it through the night comes out. Keep an eye on Twitter, because that's where I'll be posting live trading opportunities as I take them. And until tomorrow, trade well.